Well, we made it. TGIF, huh? There is a big conference going on this week. It's kicking off over the weekend, actually. So in Shanghai, right? Well, in Shanghai, Hong Kong, it's 7:30 p.m. 12 hours from now, they're going to be kicking off their big event. And let's see if I can show a picture of this. Happens every year since 2018. They've been running this event. The WAIC event. Think they would come up with a better name after all this time. So it kicks off on the 26th, which is using Hong Kong's time frame. And it's going to extend to the 29th. The theme this year is solidarity. Whatever. 800 exhibitions. And of course, it's not just going to be Chinese players, but there will be those as well. This should have a bleed over effect into all sorts of things, right? Like SMRs, drones, electric vehicles, EVTOs, just across the board, right? Everything connected to AI should see some sort of response during this event. And of course, what we get out of it, for the rest of the quarter. It's something to keep on the radar. If you've been watching a lot of those China stocks and looking for them to get past those key resistance levels that we've been talking about for a while, this could do it. Right. So just wanted to put it out there because it's been a quiet week. We've been waiting for next week's drama all week. And that just might kick it off a little bit early. Keep your eye on Bitcoin over the weekend too, right? Especially since Bitcoin trades over the weekend, that we could see some risk appetite really come in. I like it. But you guys knew that was coming anyways, right? It's not like that snuck up on you or anything. So Europe's down less than half, Hong Kong closer to a quarter, Japan closer to flat with us. NASDAQ, S&P, Dow all down all up, but less than a quarter. And then the small caps leading the way again in early trading at 0.25%. The small cap resurgence has been kind of fun in the last 2 weeks. And even Bloomberg's getting in on it now, where they name like 5-cent penny stock companies that are making moves. They were talking about one yesterday that had, I don't know, like 3 billion shares traded, and it tripled in price from 5 pennies. That's pretty funny, all things considered. But get it while the getting's good, I suppose. These small cap pushes in the mornings don't seem to last through the day, right? By noon or so, IWM and its compadres tend to fade back, and then the blue chips get the work done. But the melt up continues. You can continue to say you don't trust it and that we should fall at any moment, but we continue to not fall and just keep holding up these levels. So trade what you have, not what you want. We don't have really anything on the economic table today. all we have to do is hold the line, right? Got to keep what we've taken and not give anything back, and the market will close. And the bobbing heads on TV will talk about another really great week. Keep your eye on yields today. All right, so like we talked about, it's been that kind of week, right? We just keep climbing, keep going. We made it out of that range that we were in, and it's worth considering what that range gave us in the first place. Now, if we can make the push, we do have 6450 up there. And if we didn't use the highest to the lowest point, but instead just use the levels that we were focused on under control the whole time, we get this. So be careful with this level that we're at. In chat yesterday, we were talking about the 3 or the 4 period daily moving average. It's this white line that I keep on my chart all the time. It's a nice tell. It's what we used when we crossed back through it over here. I mentioned it the day that we got the cross through. And then, of course, when we crossed through here and we came really close to giving a little bump to the 10, we would want to see a definitive break below that, then through the 10. Then we would want that white line to cut through the 10. Now, moving averages tend to work better when they work in pairs, right? Just like with your eyeballs, you can see with one eye. My uncle has one eye. But you don't really have depth perception unless you have two eyes. Two moving averages provide depth perception. It's why a MACD is calculated with two moving averages, for an example, right? Because you get context and depth. There is something that we call a surge signal. It's when price crosses through the 3 and the 10, and then the 3 crosses the 10, and then we stay above them. Now you can use 3.8, 10.20, 7.17. I've heard a lot of combos over the years, right? It's just the idea that you want a really short-term moving average. And then one just a little higher up. We're not talking about, 2050s and 5200s and 200 400s. Those are just really, they're just too big. We want something really swift, short term, and a surge signal, the 310 or the 3.8 is a nice one to focus on. And it tends to stick for at least a little bit. You can begin a short-term trade, and if it continues to hold, then you can continue to, expand on the trade. That was a really good surge signal. And then we paused and had, a resurgence of the surge signal. And of course, then you get into chop, right? Now, I don't trade with indicators, so this isn't something that I use for a trade trigger to get in or get out or anything like that. I use it for analysis. Then I make my trade decisions based on other properties like price action. But still, from an analysis standpoint, you don't have a trigger to short this thing yet, right? And we just continue to make all-time highs every day. We're just melting up higher and higher and higher. You don't want to stand in front of that. It'll break sooner or later. But there is an old market phrase, if we consider that this drive is irrational, yeah, it kind of is. markets can stay irrational longer than you can stay solvent, right? That sounds kind of slick. I didn't make it up. That phrase has been around for a long time, but it still holds true. So you can continue to say that, it should fall and that there's no way it can go up from here. And then you can, sit back in disbelief while it continues to go even higher from here. Light volume in the overnight, kind of a sad way to finish the week. If we were looking to get something done last night, we didn't get much done. Now on the lower volume, we actually did move around a bit. We just didn't get anywhere and we didn't keep anything. So we had the inside day breakout. We managed to break above yesterday's trading range, but we didn't keep it. Now we're back inside. We have yesterday's RTH low that we can focus on. 63.92 cog line down there somewhere. And then we have all of yesterday's low, which is lining up right now on the 4-period moving average, right? We can see this sort of a green line. I keep them shaded so they're not really bright, but that green line right there, 63.92 cog line, which also happens to be the 4-period daily moving average. Because why not, right? Put the daily moving averages on your intraday chart so that you can see them and you don't forget where they're at. Wow, that's a pretty noisy picture. That's their tool, huh? Yeah, no. The bottom left and show you guys what I'm looking at here. Those ribbon indicators drive me nuts. I don't. 2 moving averages is one thing. 12? Ah, it's a bit of overkill. The blind spot is wrong. Is it wrong because it's still early and they haven't updated their stuff? Because like Spot Gamma, the market overview with the combo lines, I can copy and paste it. But if I copy and paste it into SPY, for an example, I have to redo it after 9:30. Doesn't usually change much, though. Anyways, we can see that we've tested the halfback, and it's not the RTH halfback. I've got everything measured here, so it's yesterday's halfback completely. We tested it. We need to hold it. Our own Globex low is going to be the last line of defense before we test yesterday's low. And as I was saying about how we'll close this week, if we close anywhere higher than Friday's close of last week, they're just going to continue to talk about how awesome the market is and how great everything is. And you know what I mean? Like, that's the narrative that they're going to carry. That's a low bar. All we have to do is close above 63.32. You know what I mean? Like that's a long ways off. 70 points lower, we could fall today. And as long as we close above that Friday close, they're going to sound positive about the market. So just kind of keep that in mind, right? That we have a really low bar for the day. And if we're looking for any signal of a sell-off, the mean is 61.60. That's average price or fair price, or put whatever word you want in there. We're a long ways off from 61.50. We're not headed there today, right? Not unless something really catastrophic happens. I seen people shouting from the rooftops yesterday that SPX was going to I think it was 66, and how it was all-time highs all day. It was just, cheerleading and rah, rah, rah with no depth to it whatsoever. You ask them for any sort of technical analysis or reasons for why they think they're going to continue to see it drive that high this week. And it was just, drinking the Kool-Aid. So I don't work with what you got, right? And they didn't have one single bit of data, not a chart, a level, a line, a reason, narrative, nothing. I just don't understand that sort of approach. We are well within the ADR lines for the day. The market maker move is showing that they're mildly concerned about something, but we just looked at the list and there's nothing to consider. It's not like we have an economic agenda on the table today. So a little unsure of why we have that. You're going to want to keep your eye on the market maker move through the morning to see if it continues to expand. There could be like an afternoon meeting or maybe something with the president, that he comes out and signs something. I didn't see it, but it didn't hurt to check again. There's nothing there, right? Durable goods should not be an event big enough. You know what? I say that, but then look at this discrepancy. Previous was plus 16. Forecast is minus 10. I missed the minus sign there last time. All right, that's a bit wide. If we come in the negative and minus 10, that could shake things up a little bit. Is it really that? Yeah, it is that far off on multiple platforms. So durable goods, keep your eye on that. It'll be at 8:30. The numbers are wide enough that it could shake things loose just a little bit. Now, Market Watch has it at minus 11, not minus 10, so even deeper. That could explain why we're seeing that market maker move this morning. All right, so we have the potential now for a liquidity candle, liquidity event. What you're going to want to do is mark the 8:30 open and then check that to see if we come back to it later in the day today. Otherwise, we are stair-stepping down nice and neat. It's a very clean and organized and efficient move lower. We can't reach either ADR without a breakout, and it does not owe us a breakout. We could just sit in this range and go into the close, which would be boring for sure, but it would fit, right? There's just so much risk next week that it's hard to see why funds, firms, and institutions would go piling into the market in front of that big event. Oh boy. So yesterday we had an MDP. That's 2 in a row. The pivot today is higher than yesterday's. That's bullish. Price opened above it, and that's also bullish. The channel today is really narrow compared to the last two channels. It's not as narrow as it could be. It could be so narrow that all you see is a pink line, but it's pretty narrow. A narrow channel implies that if we do break out, that the breakout actually sticks and we keep the move and we keep going. But what it's talking about breaking out of is yesterday's trading range. So we're talking about yesterday's low to yesterday's high and keeping that breakout. Well, we already tried on the top side. We didn't keep that one. And it's not to say that we can't go back up and attempt to break out of the top side again, because we could. But it's talking about either side. If we break out today, we could just keep on going into the day, right? So no reversal back inside the box. That's what this narrow channel implies. Just keep in mind that the channel doesn't make price break out, and that if we do break out, it won't make us run, right? It doesn't make us do anything. It's just giving us some context on what to expect. 2 days in a row of missed daily pivots, that shows the strength of the move. But the fact that it has ended kind of gives a little bit of a warning on that move as well, right? That it's already starting to dry up. Otherwise, we wouldn't have made contact with today's floor pivot yet. When we had the big move on Wednesday, it gave us really wide floor pivot levels yesterday. But yesterday was a sideways day. So now when we come in and look, we've already hit R1 because look how narrow this thing is compared to yesterday. It's much narrower. But you can also see we've got a discrepancy on the upside still, right? So let's try to get this in place. There's R3 across the top, 65.11 cog line, and S3 down here, 63.20. That was all of yesterday's range. This is all of today's range. It's much more narrow because yesterday was a sideways day. And if there's a big discrepancy, a lot of times it shows up in the distance between the purple line and the green line, or the purple line and the red line, right? That's R1 and S1. And you can see how this isn't very wide compared to this one. The indicator was pointing to a continued bullish outcome. And it was really obvious. Like you can see that with your naked eye. You don't have to measure it or anything like that. But when you look at today's, it's so much closer to being a universal distance. Instead, you have to look a little farther out at S2 and R2. And when you do it, looks like S2 has a little bit more extension to it. Now, of course, you can, get the math, get it perfect. I say it looks like it's slightly leaning lower, but really when it's this close, slightly isn't worth it, right? I like to see something that is so obvious that you can't miss it, that even Stevie Wonder can see it. Now, maybe you kids don't know who that is, but it's a blind guy. And if a blind guy can see it, it must be pretty obvious, right? So there is a slight tail to the downside, but it is minor. And we've already hit R1, which offers S2, right? That's the way the game works when you run with these pivot channels. Or it's not even the channel part of it, it's more of the SNR levels. So there's R1 that offers S2. It's not going to make us do that, right? Just like with these channels, price doesn't get driven by a channel. Price doesn't get driven by these lines and levels. But if you've gone through the pivot work, right? If you learned how to run these things and you've studied what they've done over the years, a lot of times we get an R1 and it leads us to an S2, or we'll get, an S1 and it leads to an R2. It's just the way markets work, right? You get those kind of pullback moves. And when you start going the other way, right? So R1, S2, R1, S2, that kind of logic, right? It's just basic expansion contraction stuff. So we've already did it. If we are going to begin the rollover here in this, a small topping pattern, then S2 would be on the table. Simple enough. just keep in mind, it doesn't owe us that. $63.50 is the lower edge of this volume profile. And hey, we brought the point of control up, right? It was lower. I think it was here. It might have been here, to be fair. I think I think it was here. But now it's up here. Doesn't matter where it was, just where it is now. It's up here with us. So if we break below 63.92 cog line and we get out of this high volume node, then we've got a little bit of support around that 63.75 zone. Remember, when it comes to the ES and the SPX and the SPY, well, leave the SPY out of it. 25, 50, 75, and round numbers are levels that you always want to keep an eye on. All right, they're option levels, even though they don't always show up in, like Spot Gamma, Mentor, and all those guys. Tom Sosnoff is one of the smartest people I've ever come across, and all the work and research he's done into how traders trade, and he's owned 3 different brokers at this point. He's got a pretty good feel for how people trade. Watch those quarterly levels. So if we fail 75, then we've got the 50, that's 63.50. And then below that, 63.25 would match us near the low of the week. But we're not supposed to get that negative today, right? Maybe a little soggy. We kind of hold the line and just limp into the weekend, dragging our bum leg behind us, right? Got a little discrepancy between the TPO and the volume profile here. It's a 10-day, 30-minute. We're going to continue to wipe these candles out along the lows over the next few days, and we'll see this point of control shift. Eventually, it's going to come up into this 72 area or even up into this 63, 64 area, especially since that's where we're at, and we can build this out more as long as we hang out here. But that would be the key, right? We would have to hang out here and build this zone out more. And so far, that's what we're doing. We just don't know if we're going to keep it. It is likely that we're going to see this point of control come up to match this point of control. So we have that high volume node right there. It's the 45 area. But that won't last long because these candles are all the ones that are being taken out. And that's next week's work anyways. The candles we're going to be taking out today are just this small section. It's Fridays, right? So that's why I say that this can move up, because this point of control matches those candles that we're going to be eliminating today. So every 30 minutes, we're going to take another candle off the board. And by the end of the day today, this point of control could be up here. And then they'll match again for a little bit. Otherwise, looking at this, we don't have a classic shape. And we've just got high volume nodes all over the place, especially where we're building it out right now. On the plus side, since we are at all-time highs, we don't have anything overhead. And, silver lining. We don't have a new VPOC for today. We've already hit that level. But the textbooks would tell you to carry that level forward through the day anyways, right? Like that's what they tell you to do if you go and study volume profile, to carry these lines from the previous day, the value area low and high and the point of control. I've already got enough pivots. I don't need another one. So I'm not going to carry it forward. But we do have this VPOC that we built earlier in the week, 63.92 cog line. And we're leaving some high volume nodes behind. So we talked about the opportunity to perhaps break out today And I said that yes, we could run up and we could break our own Globex high. We could break yesterday's high, right? And we could go higher. It is true because, price can do whatever it wants. But now we've got this high volume node to get through and this high volume node to get through. So that's two different zones. If we try to make a run back up, this pivot now is a pivot of control because it's the lower edge of this lower shelf. And then that pivot becomes a pivot of concern because it's the upper edge of that channel, right? So got to get through that channel right there. That would be a mess. But that's where your high volume node is. And if we were looking at that on different time frames, it would very likely be, wick plays that we develop. But either way, you can see that's going to be the situation we have to get through. So we can go higher, sure, but we've got all that work to do if we're going to try to make a run higher. None of that says we're going lower, just that it would be difficult to go higher. So kind of keep that in mind, right? You can have an analysis that says, I don't think we're going to go higher today. That still doesn't say, I think we're going to go down today. It's two different things. 4% above the 10-week. And if we hold sideways into the close today, then it'll give the 10 a chance to move a little bit closer to us. All right. I didn't get a chance yesterday to work on the calculations, but I am going to work on an indicator that is tracking how far the 10-week moves each day, right? It's the rate of change of the moving average. And I might not have to do it because there's already a lot of indicators out there. And I'm sure somebody smarter than me a long time ago has already thought about the idea that it would be handy to know how far a moving average has moved on a day-to-day basis, right? What's the rate of change on a particular moving average? So I'm sure there's already an indicator out there. We just have to find it. And if there's not, then I will code it and we'll give it some really funky name and give it away just to piss everybody off that sells indicators, right? So we still have the upper edge of the weekly expected move, 64.25. I would focus on 64.32 because it's just a little farther along and it's the cog line. We got this nice little distribution here and we're inside day at this point, which isn't much of a surprise, right? We've been talking about it since I started the stream. We're inside yesterday's range. It's an inside day, but it's not IX10 because, well, we only have one. We need two to have an IX10 at least. But we also have next week's range, and it's not set in stone yet. Next week's range at this point is just a projection. We need to wait until the market closes today and then look at it after hours. But we can get a little bit of a feel for what the market is pricing in for next week. I gotta say, I thought it would have been narrower. See, the idea is these ranges are built on two dynamics. One is time and the other is price. We can have a 5-day week, a 4-day week. We can even have a 3.5-day week. So how many days in the week can change? That messes with the formula. And then how much volatility do we have next week? If the volatility is higher next week than the volatility that was projected for this week, the range will be bigger. Because next week's a 5-day week and this week was a 5-day week. So they have the same amount of days. Generally speaking, it's kind of counterintuitive, but big events suppress volatility and we end up with narrow projections. We don't end up with big, wide expected moves for the week. They get really narrow. FOMC, for an example, is volatility suppressing. We often see a much narrower range the week of FOMC. That's because on Monday and Tuesday, we expect the market to go sideways, and then we get into FOMC on Wednesday and we get the big explosive move. But big events are volatility suppressing. And for the moment, we don't really see that compression yet. We'll look at this again on Monday because that's what we do every week, right? We look at it on Friday, then we come back and look at it on Monday. And we'll see if it has shrunk through the day. The gray line is the right now current price, and the green and the red line are moving up and down with it, and it will move all day until the market is closed. But we'll look at it again and we'll see if it has shrunk. The market is not really pricing in a hurry up and wait scenario, which is what I was hoping for, because that generally gives us two fantastic trading days right in front of FOMC, right? If you know the market's not going to go sideways for 2 days, you can monetize the heck out of that. But we don't have it. We don't have that signal at this point. So I have to wait on it. I'm very likely going to trade it anyways, even before getting the signal on Monday, just because I want to cook the premium over the weekend. So before the end of the day, I'm likely going to be putting on some iron condors in SPY, QQQ, the cheaper ones, and then maybe some butterflies in the SPX, just because keep the cost down. They're all pure lottery trades. You know what I mean? Like gas station scratch ticket lotteries. There's no, analysis behind them. There's no reason to believe that they're high conviction trades with, good outcomes, but they will be very cheap. And if they hit, they'll be nice payout, right? I'd like to risk a penny to make 90, right? Risk $1 to make $90. I like that sort of number. But it would all be pure speculation trades, because we don't know if the range is going to be narrow until Monday, right? When we come back in and look at it. Industrials started to break out yesterday, and they're getting ahead of the game with emerging markets. Yeah, whatever. You got it right this time, huh? I see those cog lines on the blind spot. Gotta love it when data overlaps, right? All right, so looking at what's up this morning, we got nothing, right? Looking at things that are up, we need them to be up at least 0.5%, and we have nothing that is up 0.5% but nat gas, and that's a joke. So not even going to bother with that. Looking at things that are down this morning, at least 0.5%, we've got a much wider selection to choose from. Emerging markets, that's basically China. China again, KWEB, that's China again, and yen, that's China as well. So lots of China stuff that is down, and I like that. If I want to go long over this China conference, I would rather go long off the lows. So, seeing all of these red, I just smile inside. I like it. Gonna be shopping around today. Baba, Baidu, JD, PDD. I don't know. I'm gonna look around. Definitely Baba and Baidu, since they tie right into AI anyways. You could, keep it simple with KWeb. It's really just going to be which ones have the best options to choose from. Strike selection, bid ask spread, liquidity. You know what I mean? I'm not going to just run by default, but we also have chips down, gold miners, Bitcoin down, which I like that too, because if I already mentioned we could see a surge in Bitcoin, I'd rather pick it up on a pullback. The t-shirt, the bumper sticker, buy low, sell high. Well, that's your opportunity to buy low. We did see some weird moves with gold, and it's still up 3%. in a 5-day period, even though it's down 1% now. I don't know what to think about with gold on this event. I'm not sure. And with all the ones that I am sure of, I'd rather just ignore the one that I'm not sure of, right? Gold, I don't know. Day trade that thing with futures, get it out of the way, and focus on the ones that I'm more comfortable with, because I don't know what gold's going to do with this event. The way it goes, right? Focus on the ones you know, or that you have a more certainty on. I had this conversation as well with somebody yesterday. They were really focused on trading a particular stock into earnings. Like, look, I don't know. There's nothing wrong with saying you don't know, and you don't know, you just don't know. Better than trying to make something up. There's so many things that we can trade that have a better conviction or a high conviction that if you don't know, just leave the darn thing alone and find something that you do know. Not that hard to figure out. But FOMO is a strange animal. People just don't want to miss something that might happen. Pot stocks are up. Who cares, right? Other than a day trade, they're not going to really give us anything of note because we still need legislative changes before we can expect to play the pot stock thematics. They're just not here yet. We don't have that sort of change in legislation. This looks like one of those triple X inverse leveraged ETFs. You know what I mean? This thing is just continues to bleed, and there is nothing here. So day trading pot stocks, always fun for penny stock players, but yeah, nothing. So Bitcoin, gold miners, China again, gold, silver, China again, chips. Agriculture is down a wee bit with uranium and cloud. Cloud's down a little, not enough. We need it down more to hit the benchmark, but cloud is down some. What I'm not really seeing is the Mag 7 complex, other than a little bit of cloud, right? Because that'd be Google and Amazon. So keep your eye on the whole complex, the whole Mag 7 group. You can use the ETF mags, or you can use those homemade ETFs that we all have, Apple plus Amazon plus Google, that one. But I mean, this thing works just as good. Or TOPS. TOPS is another ETF that you can use. It's like the top 20 NASDAQ stocks. That thing works just fine. In fact, it's just a little broader than MAGs. Kind of like them both, really. So keep your eye on this one because it's not really participating this morning. And I think it can be the deciding factor between are we going to be red or green today. If it just goes sideways like this and it doesn't pitch in and contribute, then we've got the other stuff, 0-day flows, headline news, all that sort of stuff, right? And that's what I got for you guys. It is Friday, so approach with caution. Be careful, be safe. Keep your eye on the clock. And I will see you all next week. Oh, do I use TradingView? Absolutely, Smith. I use TradingView. I use both. Thinkorswim is my default platform to do analysis. I don't trade on Thinkorswim. It's just I use Thinkorswim the most. And back in the day, brokers used to go down more often, right? Like Thinkorswim, owned by Schwab back then, it would go down, or IBKR would do updates and break for like a week. So you couldn't trust that your broker would, not have any problems through the whole year. And I decided I like having backups. So TradingView became my backup. Then we ended up getting, the micros on futures. So I started trading futures too, and TradeAvate's charts are just ugly, right? The whole platform is just gross. So I use TradingView to trade futures with my TradeAvate account. So I do use it, but it doesn't have the options data that I would like, right? And they're working on that. They are. Right now they are tying in with Tasty Live or, Tasty accounts. And so they are getting options data and it's getting better. I think within the next year or two, they will be challenging Thinkorswim for dominance because it's the one thing that they really don't have, right? Like I can go to Thinkorswim, bring up the options tab and crawl through the options like a nerd, put it over into the options analysis side. I can really get a lot of work done here that you just can't do on TradingView because they don't have the options. And once they do start getting those kind of options in there, think of the tools that we'll be able to develop to monetize, or at least to be able to evaluate the options trades that are going on, the kind of stuff that we can't code on Thinkorswim, because Thinkorswim gives you custom stuff, but you can't access a lot of the options data with Thinkorswim code. So it's going to be a game changer. And if you don't yet use TradingView, catch them on a sale like a holiday, Black Friday sales event, Monday, Cyber Monday event, whatever. You can get them 60 to 80% off for the year. It's good to know. I didn't know that they would piggyback TradeStation, but that's good. Another one would be IBKR. I know a lot of Canadians that are stuck with, IBKR and they don't like it. So I don't know if it, piggybacks IBKR, but if it did, that would be another really good one. I've traded Forex here as well. Once I started trading futures on it, I started using it for all sort of stuff. My Forex is connected through this. My Trade-of-8 is. I just don't do stocks and options here right now, but that's likely going to change in the next year or two. Really, they are impressive. That's what I got, guys. Have a good weekend.